Is a Wall Street sell-off getting closer? Why does the OECD keep telling us to reform our tax system? And if you want a home loan, better get in before APRA strikes. I'm Peter Switzer, he's Paul Rickard, and we're mad about money. All right, Paul, the Dow was down a fair bit overnight, 5 days of down last week. Do you think we're close to a big or at least a significant sell-off of Wall Street and then our stock market?
Well, it looks like a little bit of Septemberism, Octoberism, Peter's creeping into the market. Dow and most of the major indices in the States are now off for the month. It didn't trade that well last night. In fact, they got better than expected, or slightly better than expected inflation data, although on the high side, and they still sold off a little bit. So I think they want to take it lower. I mean, I noticed that the case data in the US has actually, improved a little bit. It was the last 7 days is down on the week before, but still obviously concerns about, the market. It's just had such a fantastic run. Not too many pullbacks, and just a bit of trepidation, I guess, both about the impact of Delta, the impact of potentially inflation, and maybe just a bit time for cooling of hills.
Yeah, there's so many headwinds, but the big problem, and you've underlined it, is that this US stock market has roared this year. And if you go back to where the US stock market was before the coronavirus crash, so we're saying February 2020, this market is up about 34% since that time. So you're going down a big dip, if you've gone back up to where you started from, and you're 34% higher. Now, it's all understandable because interest rates are low and governments are spending like never before. But a sell-off is kind of well overdue. And at the moment, like last night, they were worrying about inflation being too high. Then they get the information that inflation is too low. And then they worry that maybe the economic growth phase is going to be weaker than expected. So look, the wall of worry just pulling out so many worry warts. I think we just have to get used to the fact that there's probably going to be a sell-off, but I don't think it'll be very big because I think there's going to be a lot of people who will buy the dip. I'll be one of them because I believe 2022 will be a really strong year for economies and ultimately stock prices. What do you reckon?
Yeah, look, I'm a second person to buy the dip, Pete. I mean, I think there's just so much money out there, and with interest rates at 0%, where else can you invest but stocks? But things get hot, and a bit of a pullback, is healthy. Just one example of that, Peter, in terms of just how strong the US market has been. I keep bringing this up and I look at our energy sector, which is the Woodsides and the Santoses and the Oil Searchers and a few others. They're actually negative year to date, right? It's been a shocking place to invest. But in the US, and we often follow the US, that sector's up something like 37% year to date. So, despite all the wall of worry, and we know it's been led by technology and other things, energy in the States, that sector, tiny sector, up 37%. So it's been an overall really strong market across all sectors.
Yeah, and higher energy prices imply that they believe there's going to be a lot of use of energy in 2022. Let's go to the next one. The OECD come out every now and then and tell us it's time that we reform our tax system. And they dangle income tax cuts, but then they say the price is you have to increase and broaden the GST, which we're never going to buy, Paul, aren't we?
Not going to happen, Peter. I'd almost say move on. As soon as I heard you say the word or the acronym OECD, not very sneaky because they're always telling us something or coming out with a forecast which is 3 years out of date or whatever it is. Look. I think just a Paris. I think they're Paris-based, aren't they?
From Paris-based. Yeah.
Look. Let's put it to one side. It's not going to happen. There is no momentum in Australia to increase things like the GST.
Yeah, GST would go to 15%. Instantly, you lose everybody. And as Bill Shorten proved, when you start offering tax increases to Australians, they don't like it, particularly at election times.
Well, Bill Shorten's put tax reform back by a decade, I reckon, right? By losing the unlosable election, no one's going to want to talk about increasing taxes.
Yeah. When I think about tax reform, it reminds me of what Keating said about microeconomic reform, that even the galah at the local pet shop is talking microeconomic reform. Well, the galahs talk tax reform and no one is listening. Become an annual Switzer Report subscriber and get unprecedented access to my 7 investing principles, where I reveal the exact strategies I use to invest. You'll get access to an exclusive PDF, video recording, and even a free copy of my book, Join the Rich Club. With a 30-day money-back guarantee, a Switzer Report subscription is one of the wisest investments you can make towards your future. Find out more at switzerreport.com.au/YouTube offer, or click on the link in the description below. Final topic, Paul. Interesting one. The Reserve Bank governors basically said, I'm not going to raise interest rates to hose down the house price increases. And so a lot of experts are saying, get ready, APRA is going to strike. So if you want a home loan, you better get in good before APRA makes it a lot harder for banks to lend to us.
Yeah, and this is important, Peter, and probably something that is going to happen, because the home market is super, super hot. Just any of the forward indicators tell you that. And despite the lockdowns, Sydney and Melbourne are going absolute gangbusters, as is parts of regional Australia, and the other states aren't far behind. So, in fact, I should say the Hobart's leading. But of course, look, we saw it before a couple of years ago, and it may not have been visible to a lot of you out there, but APRA made it really hard for the banks to lend. They did 2 really important things. First of all, they said no more interest-only loans, and they stopped that, basically said to the banks, you can't lend on an interest-only basis, which killed the investor market. And the second thing they did is they changed the serviceability ratio. So said to the banks, you've all now got to make sure when you look at a borrower, you're going to require a lot more income before you lend the money. And there are certain situations where you aren't going to be able to lend money. So we had almost a mini credit squeeze. It was about 2 years ago, Peter.
2017.
If APRA wants to tighten things up, it could get quite hard. And the clear message coming out of the Reserve Bank, it's not up to us to slow it down. I wouldn't be surprised to see APRA acting. I don't know when, Peter, but look, it's certainly on the cards. And I think that if you're after a home loan, I think your opening statement, you better get in quick, is spot on.
Yeah, and I think if you remember rightly, the banks were forced to really look at our spending pattern. So if you're a person who eats Wagyu beef and drinks the great wine from Penfolds, Grange, you better not go looking for a home loan, because they won't give you one.
Yeah, they had some crazy tests in place, right? And of course, basically meant that anyone, unless you had an income, there's no chance of getting a loan. And if you had high expenses, you also got knocked back. So it was really tough. It was eased up considerably, and it wouldn't surprise me to see a few more strings, just tighten the noose a little bit, because people are worried. I mean, there is a bull market out there in the home market, and it's because interest rates are effectively at almost close to 0% professionally. And there's no sign of that stopping. And we're in for a boomer of a spring as soon as the lockdowns end. And it could be hard to get money.
Yep. Final one, Paul, is a quick one. Transurban probably going to a trading halt today.
Yeah, it looks like Transurban has won the other 25% of the West Connex in Sydney. That's due to be announced on Friday, and presumably Transurban will need to raise capital. It's in a partnership. So if you've seen the sort of Transurban share price under pressure, people are expecting a bit of a capital issue. Could go to trading halt as early as today, but certainly sometime in the next couple of days, we'll be expecting to see that. If you see the trading halt, what you'll know is that they're preparing for a capital raise to fund the purchase of that remaining, or the other, and the next 25% of West Connex from the New South Wales government.
Yeah, if they own the whole thing, it's money for jam, isn't it, Paul?
Well, it is. Well, I know you and I will be paying, Peter. We'll be paying forever, right?
That's for
but
sure.
Yeah, you get even, own Transurban.
Okay, I'm Peter Switzer, he's Paul Rickard, and we're mad about money.